All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Monday, February 24th, 2025, year of our Lord. And again, we are back trading this monster, this behemoth of the futures market. Today was a very good day of price action, minus about 2 to 3 hours in between where we just consolidated. And we'll get to that here in a moment. Obviously, we'll be breaking down price on the Dow Jones, the S&P 500, and the NASDAQ. Again, nobody's making pre-market plans for the NASDAQ, and that's okay. It's not necessary. It's not a requirement. It's just when I don't have the plan, it definitely goes into the last category, right? Which is we'll cover it last. All right. So we'll start over here to the Dow Jones, and then we'll break down the plan, and I'll talk about some of the trades that I took on the day, which wasn't many. It was just one trade for the day. All right. So go into my pre-market plan. First and foremost, I like to start with the daily candle. You guys already know that because that's, to me, that's where price is heading, right? Like that's our guide, right? So if we look at the daily candle, what you should notice right away is we had consolidation followed by an aggressive breakout of that consolidation to the bearish side. We're currently at daily demand, right? Where we should be finding buyers. We are finding buyers. However, the question is, are these passive buyers strong enough to attract more aggressive buyers to bring new highs above the previous daily candle? This is what made me very bearish on the day because my thought process was, in order for us to get back above this high, we got to rally almost 700 points. And I just don't see that happening today. That's number one. Number two, we're in a downtrend. The volatility index is pushing. London is bringing the high of the day. I'm looking for shorts. It's that simple for me, right? So that was my thesis off the daily, right? We drop down to the 4 hour and we look at some of the things that I wrote inside of my plan. First, we go to the current conditions. We were in a bullish retracement or bullish retrace of a bearish trend. We were bearish as long as we said we stayed below 44,330, which we did. We were bullish as long as we stayed above 43,422. And you can see the low of the day was 43,420. And as soon as we hit it, we became bullish, right? So yes, that worked out as well, right? Macro, Friday finally brought a break of structure to the downside. Today will be key for bears to defend in order to be taken seriously. Bulls in the overnight have pushed price back up to the 50% of Friday's sell-off. That's what the daily fib is, right? I was just estimating that we were going to get up to about 50%. We never did. But this is a great area to look for shorts. We also have a gap that needs to be filled, which was this gap down here, right? So I will be looking to play shorts targeting the previous day low, which was 422. Low of the day was 420. So my target was on point. I did not hold all the way to target, which is fine. I was completely comfortable with taking profit where I did, and I'll go over that in a second. My objective for the shorts, I was looking to short weak rallies into the daily fib. We obviously got weak before we got to the daily fib, but I'll show you why I was interested in levels even prior to the daily fib. My targets, the INWOG 43,721, the top of the range between 43,683 and 43,600, the low of the range at 43,484, and then finally the 4 hour demand zone at 43,462 through 43,293. We hit all four of those targets one by one. The market was just knocking them down. Now for the longs, this green box right here, I was looking for longs at 43,462. I was done trading by the time the longs came in, but the market hit this level right on the dot. Like I said, the low of the day so far, we're inside a power hour. We could go lower, but the low of the day so far was 43,460. That's why I've gravitated to the Dow Jones so much, because I love the way it follows structure to the T, but then it moves with the speed of the NASDAQ, right? So 43,462 to 43,292, I would be looking for longs, and what was my target? The top of the range at 43,683. You can see we hit that nicely. We ended up going even above that, pushing back above the INWOG at 43,774. My final area to look for longs, which is something that I'll probably be interested in going into tomorrow, depending on how we set up, but I'll be looking for buyers to defend the CPI candle or the 50% mark of the CPI candle at 43,160, targeting previous day lows, so on and so forth, right? So those were my plans on the day. Now let's go over some of the trades I took on the day as we break down price on a smaller time frame. So let's get rid of the pre-market plan here. Let's drop down to the 15-minute chart. Now I'll go over kind of what I was seeing on the 15-minute that made me want to look for shorts as we were, right? First and foremost, I trade 550 in the macro, the 550 610 macro. Essentially, I'm looking for the higher the low of the day to be placed. But I look for certain PD arrays, right, or areas of interest, right, that allows me to get involved with price and gives me a reason in addition to time and placement, right? So my first area was daily fib, but you can see the market didn't want to really go to daily fib, which also gives me a sign that the bears are very strong. So what's the nearest PD array? PD array is just basically, you know, what area of interest that I'm looking for. What retracement can I look for? I really don't even know what the word PD array means. I just heard a lot of ICT traders say it, so I'm saying the shit. Sue me, bro, right? But fair value gap, right? If we look here from 12:30, 12:15 to 12 o'clock, if I take this box and I run this fair value gap straight across, right? Fair value gaps are used to play retracements of price. Well, that's exactly what this is inside of this yellow box. Now I have an area of interest mixed with the confluence of 550 macro. Now let's come down to the 5-minute time frame, right? And you can see, did I not have 550? Oh wait, I gotta turn 550 on. Hang on. Let me go over here. Oh, there we go. All right, there it is. Okay, so you look over here inside of the 550 macro. It doesn't mean, oh, if it's 550, I'm getting short. That's not what that means. It means I'm looking for something to happen that I can play inside of my entry criteria inside of the 550 610 macro. As soon as I saw this doji candle print at 6 a.m., I knew that I had to market exactly where I wanted it. I knew because I've seen this doji candle play out so many times. Essentially, it creates the range, right? But we don't. If it's created at the low, I'm looking to long everything below this wick. If it's created at the high, everything above this wick, I'm looking to short. Period. That's where I'm looking to get short, right? Not to mention it lines up with my fair value gap and it's lining up with the 550 610 macro. Now, I didn't actually put the trade on to about 640. Why? Because my entry criteria wasn't triggered until around that time, right? What was my entry criteria in this case? It differs every single time, but this time it was looking for shorts above 820, and I'm looking for the market to produce some type of doji or a hanging man pattern. If I stretch out these candlesticks, and you can see we got this aggressive rally, we got this hanging man pattern, and I got short right inside of this doji of the hanging man pattern. My entry was at 43,822. You guys can check that in the shop trade ideas. I got short 822. My target was 43,421, right? 43,421. We went right to that target, but like I said before, I didn't hold all the way down here, right? Low of the day was basically 420. I ended up taking profit. My first profit target was midnight. I took profit at 690, 43,690. I took profit again down here at the lows at 43,595, right? So I think I held for about 260 points or something like that, maybe 300 points, something like that. But it was a good trade. It fit everything that I needed to happen. So after that, I was done for the day. There was no reason for me to continue trading because I had done everything that I set out to do. Now it's time to review and or teach on the day. So as we continue throughout the market review, that was the trade that I took. But if we go inside of the market open, we drop down to the 1 minute or even the 2 minute time frame. You can see things that I normally look for when I'm trading the New York session only. What I look for is inside of 930. I want to see 930 go up, right? So I can look to short it back down. It's something that I've noticed inside of macros. That last 10 minutes, even though this isn't a true macro, it's an opening time for the market. So I look for 920, 930 to trade up, right? Which is exactly what we got. And I would have been looking to short this at 723, top of the end wall, top of my chessboard. And I would have been looking for a push down to the previous day lows, especially when we got the rejection off of midnight right here, right? 688, that was sauce. Then if you were looking to get long, oh my goodness, this setup down here was textbook, right? What you were looking for is you wanted to see the market trade down into 950. That's time, all right? Remember, 3 W's, where, when, and why. The first is where. bottom of the chessboard, failure to break previous day low is your why, right? Your where, bottom of the chessboard, previous day low. Those are all good wheres. 4-hour demand zone, pre-market plan, right? All of that is hitting, right? Then we got our why, failure to break and stay below previous day low at 43,422. That's an excellent why, right? And then we want our win. This is where most people fail to relate because they don't study macro time, right? A lot of people mistime the market because they fail to even put any level of importance on the win, right? The win is not the most important thing. The why isn't the most important thing, and the where isn't the most important thing. They're all an important part of your system that if you put all three of them together, you will increase your win rate, right? And lessen your stress. And that's what I'm after, right? That's what I'm trying to do. But anyway, 950 trades down, right? We get that same doji candle that I was looking for up at the highs, right? This time, instead of a hanging man pattern, we got a doji candle at the bottom of the trend, and that is called a morning star pattern, right? If you study these reversal candlestick patterns, and then you put them together with your 3 W's at your levels, you'll start to see them at even lower time frames, right? Like I look for these things on the 30-second, the 15-second, because I know what I'm looking for, right? Doji candle at the bottom of trend, it's a morning star pattern. It's essentially letting you know the market's ready to reverse. The buyers and the sellers have agreed on price, and now they're going back up to retest the highs, okay? We get that right at the bottom of the trend. We rally up inside of 950. We dwindle down, come all the way back to that level because we got to go retest the low that brought the high. That's just how the market works. But guess what time we do it? 3 W's again. Where? 4-hour demand, pre-market plan, PM session lows, AKA the bottom of our chessboard, trading down into 1050. And this time, what does the market give you for a reversal pattern? It gives you a bullish engulfing candle. You could get long here. Me personally, when I see this base hold, I'm getting long on this sell candle and putting my stop below the doji candle that's already proven to hold price up. But that's just me. But if you don't want to get long there, wait for the bullish engulfing. That's your signal that the bulls are in control. Let it pump out a little bit and wait for the retest inside of this candlestick and go long inside of there. A lot of you guys need to really work on your entry criteria. And again, if you need help with that, there's plenty of people in here, including myself, that are more than willing to give you those particular lessons. As we continue forward, the market continues to trade above the PM session high from the previous day. It refuses to get back into this 43,782 level. And now you can see the slow walk down into power hour. And my thesis is that we're going to go and target these lows, which I said earlier today. I said at some point, the market's coming back for these lows, right? On the S&P 500, I said it's going to do the same thing on the Dow Jones, because that right there will signal the true reversal when we take out these lows, if we go up here and take out these highs, all right? So speaking of the S&P 500, let's move over to the S&P 500. And before we do, we're going to highlight a pre-market plan that was written by none other than Trading Yoga Girl, which she didn't follow, but it's all good, right? We had a fun day today. It was really fun. But anyway, macro overnight, we found support at 60.40, traded inside the top of the range at 60.57 through 60.65, right? It's going to be key. Those levels are going to be key. We are trying to trade out of it again. However, it's possible New York AM will keep us afloat at 60.56 area. Range, look to short the high of the range, short the lows, 60.57 to 60.65. I want you to make sure you keep that range in mind, Yoga, when you tell me you didn't have these levels, okay? Keep the range in mind from 60.57 to 60.65 when we go to this chart. I'm talking to you, all right? Anyway, bottom of the range, 60.25 to 60.35, okay? Look for a frail breakdown of 60.35 to go long, right, to 60.40. Look for buyers to defend 60.57 to 60.55, all the way up to 6,100. Extreme bullish plan. Look for buyers to defend daily demand at 58.80 to 58.94, right, which ended up working out really well because I think we came to like 58.97. It was the low of the day, right? Bearish, look to short weak rallies in the previous support. We never got up to 6,100. But we did tap into 60.65, to be more specific, 60.57 through 60.65. So let's go to the charts, all right? We go over here to the S&P 500. There's a couple things I want to show you guys, right, in regards to price. We're going to do the same thing we did on the Dow Jones, And I'm gonna just show you how that same system, right, works on any instrument, because it's all based on time, whether you believe it or not, right? Whether you believe it, whether you understand it, I'm here to let you know it's all based on time and structure. That's it, okay? So if we look over here on the S&P 500, sorry about the lag. I'm working on getting a new computer, I promise, right? I'm gonna stretch out these candles a little bit. All right, bet. So we look at this breakdown here, right? And the first thing you need to notice is not what happened at 9:30. Fuck 9:30, right? We're about to go trade 9:30, so that shit's already done, right? What you need to focus on is where is the dealing range and where are you inside the sequence. If you guys don't know what I'm talking about when I talk about sequence, there is a video in the Discord, or you can look up a video called Wyckoff sequence or Wyckoff something. If you don't know what it is, I will link it to you after I do this video, right? You need to understand the sequence of price, because once you understand the sequence of price, you can get in tune with the sequence of where price is heading. The sequence doesn't start at 9:30. I hate to break it to anybody that believes that. It doesn't start at 9:30. It actually starts at 1800 every single day. But in regards to where you're looking to trade, you need to find out the last time the sequence was broken, AKA the last time we broke structure. And when we broke structure, what structure did we break? Did we break structure to shift bearish, or did we break structure to shift bullish? Are we at the high or are we at the low? Are we at premium or are we at discount, right? These are things you need to know, not just Hobbs, the chessboard is this and the Hobbs, the chessboard is that. Yeah, that's cool and all, but you need to understand the sequence of price, or you're just gonna have a big white box on the top and bottom and don't know what to do with it, right? So if you look over here, right, this low, right, at 12:15, which happens to be the low, which is midnight, right? It brought a new high, right? The new high was placed at 1:25 a.m. Once the market took out this low, okay, and headed all the way down to 60.42, it then needed to complete the sequence of shifting to bearish character by taking out the high and announcing the new dealing range. Okay, the new dealing range is from 60.67, right, to 60.42, and it is bearish. It is bearish because it previously broke structure and changed character bearish. That means that until the market trades back above 60.67, everything from 60.67 to 60.42 is facilitating price in favor of the bears. I'm gonna say that one more time. From 60.67, from this high to this low, the only job of these candlesticks is to trap you long so the market can go short. That's why it looks so bullish at the high, right? That's why it consolidates for so long, because it's trying to play on your patience, right? It's trying to bet money that you're gonna look to the left and say, this shit ain't never coming down. It's another one of those days where I'm just gonna buy the high and the market's just gonna keep going. Wrong. And I've been saying it for months, right? That when this market turns bearish, all of that shit people was doing when they was buying these highs, right, at open is a very, very dangerous habit, right? And now it's starting to show, because I'm seeing in other discords, buy the dip. All right, well, this motherfucker keep dipping, right? It's not gonna be fun buying the dip, all right? But anyway, let's continue. So once we understand the dealing range, that this is the low and this is the high, now we have to find intermediate lows that we can find to play off of, right? The low at 355, right? And I'm yelling out these levels in time, so if you rewatch this, you can go and look at this on the S&P 500. The low at 3:55 a.m., right? And the high at 4:20 a.m. is very, very key in what you planning on doing at 9:30 a.m., right? Because if you take a Fibonacci retracement, I've already done it, right? And you take the low, the previous high and the previous low, which would be those two levels that I just mentioned, and you just run a fib straight across, that's that red line up there. And let's say, just for instance, you know, not picking on nobody, but let's just say, for instance, you would like to trade at 850 to 910, right? The only thing you would want to do at that point is see 850 trade up, right? So that you can take a short on the other side of 910, anticipating a major drop to the downside, which also lines up with the top of your range, right? From 60.57 to 60.65. And it lines up with everything that you're trying to do inside the market, right? I'm giving one of the Discord members shit because, you know, I know that she is going to be a boss in this game. You just gotta you gotta get out of your own way and let your process shine, right? This is a trade that I want to see you in. I want to see you take, and don't let fear get in the way of you taking it. All right. But anyway, as price continues to come down, we drop all the way down into the bucket of what was it, 58.94 or 59.94, something we were looking for. Yeah, 59.94.75. I mean, your pre-market plan couldn't be any more solid. It was sauce. I went back and read this thing. I said, Lord have mercy. The girl is seeing the market like a glove, right? Market goes right to your target, which was 36, I believe is what you told me before, right? But you longed here, which was a great trade. But you got to understand the market needs to double bottom. It needs to do an inverse head and shoulders. It needs to do something before it's going to actually give you that big move, right? So that first entry is always going to be that scalp, right? Which is fine, great trade. But you can always go and double dip on that double bottom, right? Shout out to Jay Seals. Took an absolute banger of a trade. I think he got long at 59.99.75. His target was 20 points away, basically was the previous day low at 60.24. Absolutely killed this trade. Talked to him afterwards. He felt really good about it. So I'm just loving the growth that we have in the Discord, but let's not get it twisted. This day is over. Let's focus on tomorrow and the things we did wrong, right? You're never going to learn anything from all of the things you did right today. Focus on the things you did wrong so you make sure you don't repeat that shit tomorrow. I told you the market was coming for these lows, Valdez. Anyway, let's move over to the NASDAQ because it was the weaker of the three. We don't have a pre-market plan to go off of, but again, we can freestyle it, right? Like we always do. The big thing on the NASDAQ was it was weak as shit, right? Like, let's just be real. It was weak as hell. The NASDAQ never left the PM session high, right? Which to me was a no-brainer short, right? If the NASDAQ was never going to leave the previous day, the PM session highs, then it was time to get short all day long, right? So we look at what the market did overnight, never left these highs, right? So that's easy money short right there. Don't even nuke this. If you can't even trade up to the daily fib, we shorten, targeting weekly fib, right? Shout out to Valdez. He took the shorts, and I believe he took the longs right off the weekly fib from February 3rd, which we talked about in the top-down analysis, that this level would be key and should cause a reaction. Lo and behold, you got you about 200 handles right off this level. Coincidence? Maybe. I don't think so, right? But now we're dipping down and we're trying to go further down, which could increase these weekly projections by a lot. Like if the market is really trying to continue down, oh boy, the downside is going to be crazy this week. And it could be a sign that NVIDIA may be revving up to give us something really deadly. So we'll see what happens. I'm loving the volatility. I love when the market turns bearish. It creates great opportunity for you to trade on, great opportunity for you to manage your risk and really focus in on your system and absolutely kill this market within the shop, man. That being said, this is the market review. My name is T Hives, and we'll catch you guys on the next one, man. Peace.